What's up everyone, it's Karthik with MoneyVest. So I wanted to do like a recap video for the first 3 weeks of my options portfolio, sharing my lessons and my mistakes because I think it's going to be very useful for everyone out there that is also trading options. If you are selling options, if you're trading the wheel, I think it's going to be quite an insightful video because I'm going to be breaking down my trades, the ones that I've taken, and what lessons we can learn from those. Even though it's been a very good 3 weeks, I mean, on a net basis, we've made pretty good trades, and I've made just over $3,154. That's the cumulative profit. And last week, the profit including capital gains was just over $2,316. The week before that was $211. And the first week that we started this Patreon public portfolio was just over $626. So all in all, if you kind of average, these 3 weeks here, that's about just over $1,000 per week. And that's a little over my target. My target's about $500 to $600 a week here. Of course, but as the portfolio grows, that number is going to be bigger because I'm targeting a percentage as opposed to a dollar amount. So I'm really just targeting about 0.5% per week, which is actually going to be very, very difficult to achieve. So sometimes I'm targeting about 0.3 or 0.4%. So if you really do the math, you take 0.4% times 48 weeks, we're looking at about 19, almost 20% return on collateral. So that's really the goal here, is to be able to achieve that. So I'm going to break down exactly what kind of trades I took and some of the things that I learned from my trading options here. I've been doing it for well over 2 years, by the way, but I've been doing it more publicly over the last year. And this is a more sort of, sequential updates that I'm giving you guys every single week, and, more keeping track of the weekly profits. And I'm really just to the dot, to the penny, sharing everything in on Patreon as well. Okay, so first trade essentially came out on 8/22. So August 22nd, I essentially took a trade right about here. So this right here is the candle that you see. And I've been trading NVIDIA for the most part. So NVIDIA was essentially, consolidating sideways for the most part. So this right here, you can pretty much say that there was a lot of consolidation in that range. And this right here is the candle that I ended up placing the trade. That was a Thursday. And then on Friday as well. So August 22nd and August 23rd. So these were the 2 days that I essentially ended up placing trades. And both of them were selling CSPs. So that's how you start a wheel strategy in the first place, is by selling cash secured puts. So those right there were the two candles when I placed those trades. It was really consolidating sideways. The strike was about $105 and $108 respectively. So this right here, the initial one was $105. The other one was $108. And you'll notice the next couple of days, NVIDIA was trading sideways, and that is good, right? When you are selling puts, you really want a, neutral or an uptrending chart, and you really want the stock price to appreciate, because that's how your put that you sold is going to get further out of the money and pretty much expire worthless. That's where you're going to make most of the money, because that's where the buyer of that put option is going to lose the entire value of that option, and you as a seller is going to keep the entire premium. So what happened until expiration, and these are weekly options, so I'm selling pretty much the Friday expiration, so all my contracts are Friday's expiration. And so Friday rolls around, NVIDIA is right about here, so this is where we are for NVIDIA. That's going to be August 30th, so this is the candle, and NVIDIA ended up closing at about $119, and by the time Friday rolled around, the theta had essentially eaten entirely into that options contract. So theta is very, very advantageous if you are a seller as opposed to if you're a buyer. So, NVIDIA, for the most part, traded sideways, then rolled over a little bit, and then just really had a huge consolidation sideways here. So I netted just over $626. That was the premium between both NVIDIA and SOXL. So I took both of those trades. So the reason why this worked out is because I had a good understanding of, deltas. So I sold a delta, which I think was closer to 0.1. So 90% probability that this option was going to expire out of the money with a very nice return on collateral, and also theta playing in my favor, as the last trading day, contract was pretty much expired worthless, and I ended up netting over 96% profit on that particular trade. So all in all, no complaints here. That was a pretty good trade. I, kind of pat myself on the back because the CSP worked out exactly what I wanted it to do, and that was the overall trade. Now, the second week, where the profit was a little bit less, so it was only $211 for the week ending, or actually beginning in September 3rd, or ending in September 3rd. So September 3rd, let me just take a look what that date is. So Tuesday was going to be over here. So let's see, this number needs to be updated. So this is going to be the week beginning Yes, September 3rd, because Monday was a Labor Day. Monday was Labor Day weekend, so we had a longer weekend, and so we had a shorter trading week. So I placed the trade on, let me see, August 30th. Yes, so August 30th was the next trade. So I closed this option out early, the original CSP, and then I immediately sold to open new cash secured puts. So this right here was the same day that I bought to close, and I sold to open a new put on Nvidia with a strike of 108. So 108 was my strike price. And Monday, the markets were closed, as I mentioned earlier. So Tuesday, September 3rd, when the markets opened, that was the first trading day of September and the first trading week of September after the long Labor Day weekend. We got crushed. I got crushed, honestly, because we were down over 9.5% on Nvidia, the biggest single day market cap loss in history for any stock, right? So I did a video on that. We were pretty much sending out consistent updates. So immediately, you'll notice that the stock price ended up closing at $107.99. So that right there was the entire red candle. And since my strike was 108, I immediately in one day went in the money. And you'll notice the following few days, we were kind of battling through around $108. So this right here was the day where, Nvidia traded up to 113, but ended up closing down to 106. So a pretty long wick to the upside. And this right here, Thursday, was $107.20. Now, I made a little bit of a mistake here. Now, I could have, hindsight, avoided this assignment. I could have avoided this assignment because Nvidia ended up closing in the money by expiration. So Friday, September 6th, if you come over here, Nvidia closed at $102.82. So it was in the money by, well over $5, almost $6 in the money. And I got assigned my shares at $108 and the stock was trading at $102.82. So I consider this to be a little bit of a mistake because I find managing options, I should have rolled this option on Thursday. Because Theta pretty much ate into the entire value of the option on Friday, because it's the last trading day and expires pretty much on that day, that option went in the money and the premiums absolutely spiked, right? So for me, I want the premiums to go down to zero so that I can buy to close at pretty much nothing. But because that was in the money, premiums skyrocketed and the option contract was, trading at a significant profit for the buyer and a significant loss for myself as a seller because I was down $5 per share on my 600 shares. So that's almost a $3,000 loss. So that was an unrealized loss that I was holding on to for Nvidia. Now, in hindsight, I should have rolled out my option on Thursday. The moment I went out of the money at $109 at 64 cents, so that was kind of like the high for the day. So if I go over to the 30-minute time frame, and we're looking at that date, which is going to be 9/5. So 9/5, if you come over here, I had plenty of opportunities, by the way. So that's kind of like where I am a little bit more frustrated because over here, you'll notice that Nvidia was in a range-bound pattern. So it was trading in this range on September 4th and on September 5th. So those 2 days, 9/4 and 9/5, Nvidia gave me plenty of opportunities to roll this contract out. I just didn't take them. So this right here was $109. This right here was once again $109. And this right here for a third time, $108. So 3 times in between those 2 days, Nvidia went out of the money for me, for those cash secured put. So all these 3 times were good opportunities for me to roll this contract out. Or simply buy to close for whatever profit I have at that moment. And then sell to open for the following Friday. Because the premiums were going to be much better, because Nvidia was already trading down to $108, $109, and I could have easily sold to open new puts down in the low 100s with lower deltas, because how much Nvidia had already dropped, prior to that particular day, right? So Tuesday, as I discussed earlier, on September, 3rd, the first trading day of September, it dropped over 9%. So biggest market cap loss in the history of the market. It was already down. I could have sold to open new puts for the following Friday at lower strike prices, but I did not take that. So that was my mistake because I could have easily avoided assignment because Nvidia did give me plenty of opportunities to roll this contract out or simply buy to close and then sell to open. But what did I end up doing? Well, I took assignment. I mentioned this in my Discord. And then eventually Friday, September 6th, it rolls around. It essentially closed at around $102.48. This right here was the drop from 108 down to 102. So that was a 7% drop in a matter of just 4 hours. So 4 hours, my contract went from being out of the money I was up like 20%, 30% to being down, $3,000. So that was a lot of volatility that I had to face on NVIDIA. And it pretty much came down to the last minute here, because NVIDIA up until like 3:30 p.m. was trading back up to 104. So maybe there were some expectations that buyers going to step back in. There's going to be bidders pushing it back up to 108. So I was like really in this influx of what to do. And I couldn't really roll this contract out here. I couldn't roll it out when it was in the money because the premiums just did not make sense. I was not able to get any net credit to roll this contract out, unless, of course, I was willing to go 2 weeks out, which I was not planning to give that much time to the buyer. I was like, you know what, let me just take assignment, see what next week looks like for NVIDIA, and I'm going to be selling some calls after assignment. And that's part of the wheel strategy, right? As I mentioned before, you're not going to be able to avoid assignment every single time in your trading options career. You're going to get assigned shares at some point as you are trading the wheel. So I think that is something that we have to be getting used to when you are trading the wheel strategy. But when the markets are giving you the opportunity, take them, right? Take them when there's, opportunities like these, when the markets are, giving that opening. I think it's better to just roll that contract or buy to close and then sell to open new ones so that you can better manage the position really well. Because, little do I know at this time over here when NVIDIA was, in and around this level at about 109, 108, down to $100 per share, you go back to the comments, you go back to Discord, you go back to YouTube, you go back to all the financial media, and now everybody's like, NVIDIA is going down to $96, it's going down to $90, it's going down to $86, right? So you keep expecting NVIDIA to hit double digits now, and if you're holding on to 600 shares, it can be pretty problematic, because if NVIDIA, let's say for example, trades down to $108, and you've got shares at $108, you're down $20 per share on 600 shares. That's over $12,000 of unrealized losses. So things can really turn south very quickly if you are trading options and if you don't manage these options well. So that's why, in hindsight, the mistake that I've made, I should have taken some action here, couple days or at least a day before expiration, when I still had skin in the game here, when theta was still in my favor. Well, but the good news is that after Monday, September 9th, and this was mistake number 2, although I don't consider this like a huge mistake, but certainly could have increased my upside potential, because when you are trading the wheel, one of the things that you have to remember is that majority of your profits are actually going to come from capital gains. The premiums are good. They're going to be consistent, predictable income for you and your portfolio. And I'm again targeting 19 or 20% returns off of the premiums that I can collect. But some weeks you're going to be $211, and some weeks is going to be $2,000, right? So it's not going to be extremely consistent. If you average all of this out, yes, $1,000 per week is what I'm making right now in the last 3 weeks, but it's not going to be $1,000 every single week. It's going to be $200 some weeks, $800 some weeks, it's going to be $3,000 some weeks. So it's going to fluctuate, but it's going to most likely average in and around those levels, depending on how much capital you're trading with and what stocks you're trading with. So, fast forward to Monday, I start fresh. I've got 600 shares of NVIDIA, cost base is 108. NVIDIA opens around $104. We see a little bit of momentum higher, so we get up to $106. And I believe this is the time when I actually ended up selling my calls. So 9/9, yes. So September 9th, Monday, so this past Monday, is when I sold my calls right at the open. And as soon as we saw that spike in NVIDIA, I think this is really where I ended up selling calls at around $105 per share. My strike was 110. Now this right here is what I consider to be mistake number 2. If I waited just a little bit longer, right? And look, the reason why I don't consider this as a mistake is because I'm asking myself to be patient and to time the market, so to speak. Because when you're trading options, there's still a small element of timing the market, right? Because if you are able to sell calls at the very top and you're able to sell puts at the very bottom, your your probability for success, your probability for profit is going to be much, much higher. But I really want to eliminate all of that from my trading, and that's why I don't consider this as like a trading mistake, but more like a patient thing that I could have just really simply waited a little bit longer to see how the price action trades throughout the day. And had I been a little bit more patient and waited for 106, 107 levels, I could have picked a higher strike, right? So instead of $110, I could have been at 112, 114, gotten slightly lower premiums, but higher capital gains. Because what happened last week for the NVIDIA, it's seen a very, very strong recovery. I mean, from lows of Friday, NVIDIA rallied a little bit over 15, almost 16%. And bulk of those gains coming on September 11th. That was Wednesday when Jensen Huang was pretty much talking at the Goldman Sachs conference. So my calls absolutely got blown out because they were all in the money. And what did I do? I ended up rolling them out. And that's what you do because that is a lesson. It's not really a mistake, but it's more of a lesson that if my calls were in the money and they were really deep in the money because my call strike was 110 and Nvidia was trading around $118. So this right here is pretty much where it ended up closing at for the week. Why not roll them out, right? Because if I'm able to take in that credit, why not roll those contracts out to a slightly higher strike and 1 week out in expiration so that I can actually generate more capital gains. So that gives me an additional dollar per capital gains because my strike is now gone from 110 to 111. It's not 112, it's 111 now that I've pushed it out to next Friday. So that's the current trade that I have opened right now on this Nvidia call that I have sold for the next week that I've rolled out. Now, a big mistake that I made here is that I've also encouraged everyone to avoid in the Discord and the Patreon is to never roll an option with a market order. That was perhaps my biggest mistake. I mentioned this in our Discord and our Patreon members only video as well. And hopefully you can learn from this. So please do not make this mistake. I highly encourage you to do not make this mistake because the market makers ended up making money off of my roll. So what ended up happening is that as Nvidia just blew my calls out of the water, so as it was pushing higher after Jensen Huang spoke at the Goldman Sachs conference and Nvidia pretty much rallied over 15% on the week, my 110 call was very much in the money at $118. So I ended up rolling up and out on my calls. So went from 110 to 111 for next Friday. Now, in order for me to roll these contracts, I need to buy to close the original option of 110. So I need to buy the contract back to close it. And then I need to sell to open a new one at 111. Now, the spread is what I'm really going to be concerned about because if I'm closing my original option, so if I'm buying to close, I'm the buyer, I'm buying off of the ask, right? Whoever is selling, right? So I'm buying off of the ask to close the original contract. And then I'm selling to open at the bid a new option contract. So the spread between the ask and the bid, so the ask of the original contract, because I'm buying to close, and the bid at the second option, which I'm looking to open now because I'm the seller, that spread needs to be a net credit, meaning that spread needs to bring me more money, right? So in other words, whatever I pay to the ask to buy to close needs to be less than what I receive when I sell to open at the bid. So hope that makes sense, right? That's what a roll is. That's what I'm trying to do. So I'm rolling this option out. Now, when I was doing it on my Charles Schwab, it showed me that spread was indeed positive. It was allowing me to receive a credit of well over $240 because that was a 40-cent spread. I think I ended up closing my buy to close contract at $8.90. So that was the price per contract. And the amount that I received was $8.99. And that's where I got screwed over because that's only 10 cents. That's only 10 cents. And I'm actually lucky that I received the net credit because I place a market order. And market orders are the worst because they can give you the worst fills, right? The spread at the time of placing that order showed me 40 cents. The spread between the ask and the bid, 40 cents, meaning 600 shares, $240, right? That's how much the net credit was supposed to be for rolling this option out. But I left it up to the mercy of the market makers, and the market makers gave me the worst fill possible, right? So market makers essentially make the market, and they're the ones that have both the bids and the asks, and they're the ones connecting those orders, and they only gave me 10 cents on the dollar, so I obviously only made $58 for rolling this contract out, still unlocking about $1 per share in capital gains, but net credit was really bad. It was only $57.90 because they only really gave me like under 10 cents per contract. So lesson learned, do not place market orders when you're rolling these options because, if you're trading a slightly higher size, right? 6, 7, 8 contracts, 10 contracts. In the future, I may be trading 20 or 50 contracts or as much as 100 contracts. That's a lot of size and liquidity may not be there, right? So you might have wider spreads, but you still want to place limit orders in order to avoid leaving it up to the market makers to give you the worst possible fills when you are trading with that much size. And of course, there's that much slippage between the ask and the bid spread. So those were a couple different lessons and mistakes I ended up making over the past week. So hopefully this was a little bit helpful in our understanding. So going into next week, Nvidia's at $118. My call strike is 111, so I'm right about here, right about there. So if Nvidia, let's say, drops, about 6% next week, doesn't matter. My profits are pretty much capped. $600 in capital gains, plus the $57.90 in the net credit that I received in premiums. So $657.90 is most likely going to be the next week's profit, right about there. And then, of course, I will also be selling new puts. I will also be selling new puts on Nvidia, and I'll try to target at least another $200-300 for the week. So we'll most likely be just over $800 profit per week is what I'm going to target for the upcoming week. So hope you all enjoy this video. This is a little bit of a recap going over my mistakes, my lessons from trading options on Nvidia here. And again, this is strictly for the options portfolio. This is not for my long-term shares or my long-term positions. That's different. I'm not touching that. I don't trade options on that. This is strictly for the options portfolio. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like and subscribe to the channel if you're just joining us for the first time. Again, links to our Discord and Patreon is going to be down below if you want to join. Of course, be a part of our MoneyVest community. As always, happy investing. I'll see you all in the next video.